Hi, hello everyone. Welcome to Learn to Earn channel. This is the second video of the series that we are talking about. In our last video, we discussed in brief about the inflation, and this video we will look at the various forms of investments that a commoner or a common man like you and me can consider investing on. Right. So this is a framework that I thought of showcasing it to you. So the various forms of investments that are available in the market, at least for us, is like stocks, investing in stock market, mutual funds, again through stock markets, bonds. For few, bonds are new. Bonds are nothing but the corporate securities backed by the government. And the fourth one is gold. In within gold, there are various forms of gold available. I'll make a separate video for this topic. And the next one is real estate, purchasing a flat, purchasing a house, or buying a land kind of thing. And the fifth one is a common thing that most of us know, at least in Indian context, we know very well: fixed deposits, recurring deposits, PPFs, extra, etc. And the next one is cryptos, right? So I have classified all these things on various parameters. One is the risk, the second one is return, the third one tenure. Tenure is nothing but how long you're obligated to stay invested in this form of instrument. Whenever I call instruments, it is nothing but stocks, all this form of instruments, right? These are various financial instruments. The next one is liquidity, how quickly I can sell what I possess and then return it as or convert it into money. The next one is investment size, like what is the amount or the size of amount that I should invest to buy that stock or to buy that mutual fund, right? So I have classified all these things as high, low, or moderate. H represents high, M represents medium or moderate, L represents like low. So this green things, wherever I am have highlighted it in green, these are goods according to me. Medium is okay. Yellow is moderate or medium. That is fairly okay. Red is dangerous. I maybe an undesirable thing. Let us quickly go get into stocks, right? Stocks are highly risky and it gives you high return. Tenure, you can stay as low as possible. You can buy the stock today and sell it immediately. Liquidity is also like very high. You can very much sell it immediately on the market and convert it into cash. Investment sizes, stocks are available from even for a rupee or 2 rupees, or even it goes as high as like 60,000, 70,000 also, right? MRF, for example, MRF stocks is around 70,000 rupees. And one more column that I have given is historical returns. So what is the historical return of each of these financial instruments? Stocks is of like 12 percentage, mutual funds again 12 percentage. These references I have taken based on the indexes or indices, the National Stock Exchange or Bombay Stock Exchange. Maybe there are many things which are new to you at this point in time. I will methodologically show where I have gathered this information and how I have arrived at this rate of percentage in our future videos, right? So I have just given a representation of how you could get a view of what kind of risk, return, tenure, liquidity, and investment size that you need to consider, or you can read through this form of investments, right? One thing which I wanted to highlight is the common mistake that a middle class person would do is, or a trap he or she get into, is this real estate, right? If you see among the all forms of investment, real estate has lot of risks or undesirable things or danger zones, but still at a very early age we get locked up into this real estate and then end up in paying EMIs for 20 years or 30 years, right? So it kind of restricts you from investing into all the other forms of investment which would give you a better returns also. It's buying a house is definitely an emotional thing. I'm not against it, but my stance is probably I won't buy the house at this point in time, and I don't want to get into the trap of paying EMIs for ages, right? And I hope you got a sense of what we are talking about. And in the next video, I will methodologically prove what would be your return if you had invested, let's say, 100 rupees or 1000 rupees, and how your compounding works by considering inflation also into picture. Thank you so much for watching. these things, whatever I have mentioned here, are subjective. According to me, probably the real estate is highly risky. For you it may not be, because there are a lot of ifs and buts here. If you have invested in a prime area, probably the risk would be very less and the returns would be super duper high, right? So all this L's and H's and M's may vary according to a person. So feel free to comment your thought process on that or your point of view on that in the comment box. Thank you so much. I hope you enjoyed the video. If you feel that it is beneficial, or if you feel that there is a room for improvement, put it in the comment box. I'll definitely take into consideration while forming the next video. Thank you.